the profit is the most important indicator of the performance, effectiveness, and efficiency. The income statement is the center. Is the central of the financial statements. Even for the security regulators. And so, under the old PRC GAAP, its most important mission is to prevent from window dressing in the profits. But we all know that the new standards, which is fully converged with IFRS, takes a balance sheet-based approach. So the key performance indicator may be the comprehensive income. The second one is fluctuation of profit and net assets. Like IFRS, the new standards also introduce fair value as a measurement for financial instruments and investment properties. So the profit and the net assets are more likely, the volatility will be increased. The third is the change in the share price and credit rating, which is related to the volatility of profit and net assets. Dividend policy. Under the PRC law, the profit distributable as dividends to shareholders is determined on the basis of separate financial statement, not consolidated level, just based on separate financial statements. We all know that in the separate financial statements of a parent, its investment in subsidiaries are accounted for using cost method. So only when the subsidiary distributes dividends to its parent, the parent have the ability to further distribute the profit to its own shareholders. So the dividend policy may be affected by different accounting standards. Since under the old PRC GAAP, equity accounting is required for the separate financial statement level of the parent. The fifth question is relationship with investors. Investor, just as discussed earlier, there are so many changes from the old GAAP. So the company has to explain to its investors why such changes have occurred, why the information under the new PRC GAAP is more useful and more relevant to their decision making. The sixth one is loan covenants, such as current ratio or acid test ratio will be affected by the different accounting standards and the different accounting policies and practices adopted under the different sets of GAAP. Information and accounting system. Generally, the cost of accounting will be more higher in the new GAAP than in the old GAAP. So the information accounting system will be more complex under the new GAAP, and more information will be required for the disclosure. As will be discussed later, the information disclosed is much more greater. The volume of information disclosure is much more greater under the new GAAP than under the old GAAP, whether for the listed company or for non-listed company. Risk management and hedging strategies. Under the new PRC GAAP, the hedge accounting is very similar to those required under the IAS 39. So, a risk management policy should be written and presented to auditors and the hedging relationship should be designated by the management. Without such documentation and designation, the hedge accounting method cannot be applied. So, if the hedge accounting cannot be applied, then the net profit and net assets will be more volatile. Policies and procedures for internal control. We know that one of the goals of the internal control is to enhance the quality of financial reporting. So, as the practice and accounting policies change, the policies and procedures for financial reporting and the controls over financial reporting will also be correspondingly changed. In April of this year, the MOF announced together with other 4 governmental departments, issued a detailed guideline on the information on the internal control by the Chinese business enterprises, which is expected to be applicable for Chinese companies listed overseas in next year and to be listed on the main board of Shanghai and Shenzhen stock exchanges from the January the 1st of 2012. The detailed guideline for internal control is much similar to the SOX Act in the US, so generally we refer to it as CSOX. As to the valuation model, the introduction of fair value as a measurement may require use of valuation model. So, the management should make careful decision when choose the valuation model to be applied and the parameters to be used in that specific valuation model. Employee incentive plan, such as discussed earlier, the key performance indicator, such as profits or net assets, will subject to change under the new GAAP. So, the employment incentive plan may also be revised to reflect such change. Or we can introduce share incentive plans if permitted under the regulatory rules issued by CSRC. The CSRC and the State-Owned Assets Administrative Council has issued certain rules and regulations on the share-based payment, share-based awards for listed companies granted to their officers and directors. Merger and acquisition plan. The business combination is an important topic of the new accounting standards. And we all know that the business combination could be divided into 2 different categories: under common control or not under common control. Under the PRC GAAP, business combinations under common control is required to be accounted for using pool of interest method. But the business combination under the not under common control, similar to IFRS 3, is required to use acquisition method in accounting. So, the different type of business combination may have different impacts on the financial statements. And also, the last one, term and conditions of transactions. Because the terms and conditions of transactions can also affect the outcome of financial performance. Then our recommendations. Firstly, to identify key changes arising in the new PRC GAAP and undertake an impact assessment on the new PRC GAAP and its effect on the financial statements. The third one is to communicate with investors and other parties with interests to explain to them why such